Imagine waking up tomorrow. The stores are still open. The stock market is still trading. Politicians are still giving speeches. The news says everything is under control. But behind the curtain, the economy is already collapsing. Not with a bang, but with a carefully managed illusion. Because throughout history, governments have learned a dangerous lesson. People don't panic when economies start failing. They panic when they discover the truth. And that raises an uncomfortable question. What if the greatest financial trick in history isn't preventing collapse, but hiding it? When most people imagine economic collapse, they picture chaos. Empty shelves, bank runs, mass unemployment. But real collapses rarely begin that way. Think of a sinking ship. The passengers don't notice the leak at first. The lights are still on. The music is still playing. Everyone assumes everything is fine. And that's often how governments respond when economic problems begin to appear. Instead of fixing the hole immediately, they focus on keeping the ship moving. The first tool is debt. When revenues fall and spending rises, governments borrow money. Then they borrow more money. And then even more. It's like paying off one credit card with another. The problem doesn't disappear. It just moves into the future. The second tool is money creation. Central banks can inject new money into the financial system. Markets rise. Investors feel confident. Asset prices climb. For a while, everything looks healthy. But appearances can be deceiving. If the underlying economy remains weak, the problems never truly go away. The third tool is statistics. Governments publish numbers that measure inflation, growth, employment, and productivity. Those numbers matter because they shape public perception. And sometimes, small changes in measurement can create a very different picture. The data may improve, but everyday life may not. Eventually, reality catches up. Debt becomes harder to manage. Prices rise faster than wages. Confidence begins to fade. And once trust starts disappearing, the illusion becomes difficult to maintain. History has seen this pattern many times. Economic crises rarely arrive without warning. The warning signs are usually visible years in advance, but they're often hidden beneath temporary solutions and reassuring headlines. When trust finally breaks, the consequences spread everywhere. Savings lose value. Businesses delay investments. Families struggle to plan for the future. Because economies don't run on money alone. They run on confidence. And confidence is fragile. The unsettling truth is this: economic collapse is rarely a surprise. The clues are often there for anyone willing to look. The real question is whether people choose to notice them before it's too late. So what do you think is the biggest warning sign governments hope people ignore? Let me know in the comments below.